Alright guys, it's Hank McGurk here. I thought I'd take the time to try and clear up a little bit of the confusion surrounding cryptocurrency, regular currency, and gold and silver and how they all relate and how you can think of them in a different way, and it will really clear up a lot of the disinformation that comes out surrounding these three different, very different type of investments, I guess I should say. All right, and first things first, I just want to let you guys know, all right, we're going to compare the three things here. Cryptocurrency, Federal Reserve notes, and I might speak on gold and silver depending on how long the video gets. Okay, so to call cryptocurrency a currency is actually a bit of a misnomer. To really properly think about cryptocurrency, you need to think about it as part of the tech sector or a technology, an emerging technology, where people are creating different types of coins on the blockchain system to find out which ones work the best, which have the best utility, which cost the least for transfers. So a cryptocurrency would need to have some utility value. It would need to be secure. The cost of processing would be low. The transactions would be easy from person to person. There would be enough infrastructure in place where you could exchange your cryptocurrency, say, for cash, like Bitcoin ATMs have right now, or be able to buy goods from corporations, companies, or people that would accept it. Inflation is a little thing that I'll get on to later when it comes to cryptocurrencies, because there is inflation in some cryptocurrencies. And then the speed of transaction. So this is all the different problems that cryptocurrency developers are trying to solve to make it better than the way that our current banking system works, where they get a slice of the pie essentially for all the transfers, and they also too are printing currency, and they too are they have quantitative easing and other monetary policies that manipulate the markets. So let's go back and take a look real quick at regular currency, okay, what nations trade between one another. All right, and we're going to use the USD, or the US dollar, as our benchmark. And so we're going to call that $1. That's our benchmark. So as of today, and I think today is the 15th of March, 2018, the euro trading to the dollar is at 0.80767. Now, I'm not going to go through these all. The British pound is at 7.7157. The Indian is at 64.9595. This is the Australian dollar. This is the Canadian dollar. This is the Chinese yuan. Oh, this is the Swiss franc. This is the Japanese yen. This is the Chinese yuan renminbi. Here, let me make sure. And this here is the Mexican peso. So if we're looking at it as a ratio that's expressed 1 to 1, $1 US, it would take 18.57, so let's call it about 18.5 Mexican pesos to equal $1 US. So all these here, marked with the minus signs, show you that the value of the US dollar is more than the value of 1 yen. Now see, for example, right here, the yen, it's 105.82, so basically 103 yen equals $1 US. Okay. So what you need to understand, or if the number over here is less than the one, then the euro buys more, the British pound buys more, the Swiss franc buys more for your dollar. You get more bang for your buck when you're currency trading. And for a long time, there's been like a black market. It's like a different type of market where people do nothing but speculate on the value of currencies and whether or not they would increase. Okay, and what makes a currency increase or decrease in value? Well, that has to do with a couple of different factors, actually many different factors. But people take a look when they value a currency at what the gross domestic product and production capacity of the nation would be. So the production capacity of the United States, for whatever other people in the world might tell you or what you would hear, the production capacity of the United States is very strong. Now, we've lost a lot of our manufacturing base. That's true. We need to bring that back, absolutely. But the United States has such a large landmass. We have a very capable workforce. We have all the natural resources that we need right here at home. We also have an abundant supply of oil right here at home. We have significant oil reserves, energy right here at home. We have infrastructure that is crumbling, it is decaying, but we still have the infrastructure to rebuild for our productive capacity. We are a net food positive exporter. So we do have a lot of economic advantages as compared to something like, say, Germany or which in Germany does have a very strong economy, don't get me wrong. They have an excellent manufacturing base. They create really good finished products and finished goods. But maybe compare it to Italy or something, or Japan would be a great example, because Japan, they don't have very many natural resources. They have to import, I think, a lot of food to feed their population. So Japan is reliant on imports in order to sustain its economy. Also, the Japanese central bank loves to print currency. It was like the test for the central banks to see how much currency that they can print, which has a tendency, or has a tendency, continued, to devalue each yen. So that's why it takes 105 yen to get a single buck. Now, our own Federal Reserve has done the same thing, and that's what inflation is, where they print money at low interest and bring more money, increase the money supply, essentially, without being able to increase the money velocity because of failures in our regulatory system and the financial engineering in the markets. But that's a whole nother story. But that can definitely play with a decrease in the value of the US dollar compared to other currencies in the world. Well, right now, because of globalism, we're actually looking at a situation where all countries with central banks are having problems with the value of their currency. Okay, and another thing to note here is you need to expand your thinking when it comes to currency as far as what the currency of that nation will buy. So, for example, the Chinese yuan, renminbi, buys more in China than it would in the United States. So, goods, if you're using the local currency, local goods will be cheaper. But if you went over to China and you exchanged your dollars for renminbi, the local currency, you would be able to buy more. So I think like it might cost 2 renminbi for a beer in China for like a Tsingtao. And in America, I think, we're talking, let's say like a 22 ounce or 40 ounce beer. And in America, I think you have to pay something like maybe $3-4 for a Corona or whatever, a 22 ounce or 40 ounce beer, something like that. So if you were to actually look at it and how much yuan or renminbi, Chinese yuan renminbi, it would take to buy that same beer in the United States. That would basically be 6 times 4, 24. It'd be 24 renminbi to get that same beer here in the United States, where it would only take 2 renminbi to get that same beer or similar beer in China. So the local economy plays a big role, and that will play even a bigger role in the future. So let's get on to cryptocurrencies. Now, cryptocurrencies, like I say, you need to think of them not as stores of value or of currency, but as aspiring currencies. So let's just take a look at 3 real quick. Steam, which I believe today is valued at $2.51. Bitcoin, which is valued at $8,715.49, and Litecoin is valued today at $155.10. Okay, so I've already gone over why one cryptocurrency may be more valuable than another because of its ability to be secure, to have a low cost of processing, ease of transaction, infrastructure, so on and so forth, speed of transactions. So each cryptocurrency or each coin kind of has a different way of doing business. Some are better at processing transactions faster. Some of them are more widely accepted, like Bitcoin. They have better infrastructure. So that all plays on the value of these aspiring currencies. Okay, so people that are taking their money and investing in cryptocurrencies, thinking that they're just like a traditional currency or chasing a rate of return, are doing the same thing that people did back in the 90s before the 2000 dot-com bubble burst. So if you don't understand the tech sector, you don't understand what's going on behind the scenes and how the technology works, you really have no business investing in cryptocurrencies. Okay, so recently there's been kind of an explosion in Steam. All right, and I like Steam. I've moved over to that platform because I'm finding YouTube's censorship is very oppressive. I'm a big fan of free speech. I'm pretty much a libertarian, definitely a social libertarian, not necessarily always a financial libertarian, but that's a whole other argument for a whole other day. So when you go over to Steam it, let's get this camera right on the right spot. When you go over to Steam it, it's free to use. It's free to upload. There's no ads. And you get paid for your posts, which is awesome. Because, now writers and content creators are able to get paid for their work. And YouTube isn't taking a big slice out of it with their, they soak up all the ad revenue. You might get paid pennies for what your video is really earning. And beyond that, they censor and demonetize and all sorts of other breaches of the First Amendment, limited states, and so on and so forth. Okay, so you're thinking to yourself, well, where is that money in Steam coming from? Is it generated out of thin air? How does that work? How can I join Steam and have some little Steam power and some Steam credits and put no money in and get paid for my post? But who's feeding that machine? And how does Steam pay for the operation? How does it pay to host the uploads? How does it pay for the processing of that cryptocurrency? And where does Steam get its value? Well, let me show you how that works, because Steam is a little different than other cryptocurrencies, as it is, just like Federal Reserve notes, a fiat currency that can create more steam out of thin air. So, let's say, for example, and this is just an example, there are 1,000 total steam in the world. Okay, and we're going to call that S. And Steemit creates 9.5% of that total steam, just creates it into existence. Okay? So what was previously 1,000, you add the 95 to that for the 9.5%. So now there are 1,095 total steam in existence. Well, the total value of steam has not changed. So to demonstrate that, started with 1,000 steam with today's value of $2.51. Okay, we multiply that out, and the value of the entirety of the steam is $2,510 US. Okay, so revise that now. The 1,095 steam, adjusted after inflation, is still worth $2,510 US. The total value of the overall steam did not change, although the amount of steam in creation did. So the value of each steam has decreased. So one steam, as before, was worth $2.51 US dollars, $2.51. One steam, after the adjustment, is worth $2.29. Okay, so you have to ask yourself, all right, well, why would anybody invest in something they're going to lose 10% on? Is it a Ponzi scheme? How does steam sustain itself? Okay, well, first of all, let's talk about how it sustains itself and how it works. Because of this inflation, that's how steam is processing its transactions and also powering Steemit itself. Okay? Now, is this economically viable? Well, it all comes down to a little equation here. Okay? This is the percent change in the value of steam, and that is going to equal the percent change in investors minus the percent change in overall steam. Okay? So if we have 300, we have an increase in by 300% change in investors, minus the 9.5% percent change in total steam, we're going to be up 290% change in the value of steam. Okay? I hope I'm being clear with that. All right? So, the main question is, will the percent change of investors exceed the percent change in overall steam over time, as time goes on? Will the number of investors, or percent change in investors, let's see, be greater than or equal to the 9.5% steam creation inflation? Okay. One could argue yes, because people's incomes change over time and increase. So yes, you can continue to have that percent change in investors. And as long as it's greater than or equal to the rate of inflation of the steam creation, you're going to have either a flat or a positive profit expectation. Well, let's say, for example, no, that the investors, the percent change in investors does not reach at least that 9.5% threshold. And there's something called, some new cryptocurrency or social media platform comes out where and let's just call that steam version 2 or S2, where the percent change in the steam 2 is equal to the processing costs only. So there's basically no steam welfare. Okay, so they're not printing or creating this much steam at 9.5%. They're basically only covering the processing or transactional costs. So because that percent change there is lower than 9.5%, obviously you need a less of a percent change in investors, or overall, even if there were no percent change in investors, there would be an overall higher profit expectation. Okay, so if the percent change in investors is less than the percent change in overall steam with the 9.5% inflation, you're going to have a negative return, and steam would no longer be viable. So that's just one look at how cryptocurrencies may work and how different ones do different things. So if you didn't know about that and you were just chasing this $2.51, you're just looking at it, you're trading on like a day trader or whatever on a day-to-day basis, and you're trying to buy low, sell high, mortgage the house, take risks because you see that, you know, the charts are showing you a growth here. And personally, you know, you can do statistical analysis like that, but all the greatest investors in the world use the products that they invest in. They know about the products that they invest in and how they work. Otherwise, they're not going to be very successful investors, and you won't be able to read the tea leaves without knowing what's going on. You won't be able to read the tea leaves and get out ahead of a crash. You'll know whether or not if the cryptocurrency itself is a fraud or a scam. So I hope that pretty much gives you an idea of how cryptocurrencies are not exactly currencies. They're aspiring currencies. They're consider that a tech investment, okay, which, you know, is going to deliver, it's going to have a lot of volatility. It always has. Investments in the tech sector have always had a lot of volatility, but they've also had high payoffs if you've done it right. But if you haven't done it right, you'll lose your ass. And with the upcoming market crash, with the crash in the economy, and I'll make another video on that because it can go several different ways, but we know the economy is coming down. People may have to pull their investments in these cryptocurrencies, and I do believe that will happen, absolutely. It's going to separate the wheat from the chaff. Only the best cryptocurrencies will be left because people will be liquidating everything that they can, or conversely, they could be looking for a store of value, which is what a lot of people are doing when they're investing in cryptocurrencies right now. They're using them as a store of value because they can see that they can get high rates of returns compared to the stock market. And that is not a way to protect your wealth at all. In fact, it will be extremely risky. The way to protect your wealth, and time has shown us this, is precious metals. Precious metals just hold their value over time. They're not subject to inflation. An ounce of gold is an ounce of gold is an ounce of gold. And people throughout history and time have always accepted that as money. You know, barring any cataclysmic event where people no longer have a use for money and they would rather have rice or bullets. But it's not going to really matter much if we find ourselves in that situation. So gold is precious metals is a store of value. Currencies are something to transact business in, and you can speculate on those based on the production capacity and strength of the nation and several other different factors. And cryptocurrencies are part of an emerging tech sector, and they do different things, serve different purposes. So you would invest in the ones that you thought would do the best job of bringing your idea forward, or participating in the community to bring something new into existence that works better than the old system. Any questions, just leave them in the comments section below. I'll try and address them. It's been Hank. I will catch you guys on the flip side.